beginning to kind of get out a little bit, so I'm probably a little out of practice. So you guys can help get me back on track a little bit. So yeah, we'll talk a little bit about these cattle markets. Lots of things to talk about. And all of a sudden, my changer is not working. It worked until the last time I tried it. Oh, there we go. Okay. So just a quick look at where we are in the markets right now. Southern Plains. There's the calf markets. Now, you know, it's all of our comparisons right now mean nothing, right? Because we're comparing to this time last year. You remember where we were this time last year, right? So for the next few months, all of our data just about is really difficult to interpret the way we normally do. And that's true here. So we were beginning to see market impact. So we're above where we were last year, but you can see that it's really dropped here lately. And I've got a Oklahoma. This thing is just not being cooperative now. It was working earlier. There's the big feeder cattle. And of course, you know what's happened here. So here you can see Oklahoma prices for the light weights, 6 weights and 7 weights. And the light weights in particular have dropped really hard the last, just this last week in particular. April has been tough. Futures market has dropped. Geez, how far? A lot, right? Over, yeah, a bunch. And of course, feed markets, fed cattle markets are flat. They're struggling. So feeder cattle markets are probably in the worst position right now because they're in a real vice. Fed cattle markets are capped up here. They, you know, if they could go up, high feed prices would still let feeder cattle prices go up, but they can't. And of course, the feed market is just, we don't know where the heck this thing's going to get to in a minute. Well, I'll show you some cash prices here in just a bit. There's the slaughter cattle. We did, you know, all spring. I can't use a pointer on this screen either. All spring, instead of having a spring rally, we were flat, literally flat for about 6-7 weeks. And then we finally did break out of it and moved up a little bit above 120 for cash prices in the Southern Plains. And then we've actually pulled back just a little bit. I think last week we actually ended up at we ended the week at like 119, pulled back a little bit. Pretty capped, and you know, we'll talk a little bit about that, but one of the things that's been more apparent the last few years, and I think really apparent right now, is the fact that after about 30 years, we did finally get rid of enough slaughter capacity that we really don't have enough capacity right now. And last year's dynamics pushed some cattle into this year. And so the bottom line is we got more cattle than we can really kill right now. Not because there's any specific disruption, although I think the packing plants are still struggling with labor, but they've been struggling with labor in a general sense for 4, 5, 6 years or longer. But it's not like the COVID impacts a year ago where they had to shut down because they couldn't run the plants. They're running the plants as best they can, but there's been an effective labor cap for a number of years, and we're really up against that right now. I'll get to cattle and feed stuff in a little bit, so I won't say any more about that right now. Again, there's the chart. It looks really goofy. I didn't build, well, I'll show you another one in a minute where these box beef prices have gone this year. But, you know, it looks like it hasn't moved all that much, but that's because we got that spike from last year that lasted about 4 weeks going up and about 4 or 5 weeks coming down. Cull cow prices started up in the spring, backed off a little bit, and then have kind of gone up again. So not exactly a normal seasonal pattern, but we're getting there. They typically are seasonally high right now, April, May, June, maybe into July, and then they start tailing off in the last part of the year. There's the cow cutout. I didn't even realize I left it in here. So that's kind of where, you know, that's sort of what drives that cull cow market. And this is, of course, mostly derived from the hamburger market. So all of those things. I have been plotting since the first of the year, just every day's choice. This is choice, it doesn't say that on there. Choice box beef price. And, you know, the run up from January to through the month of January really was pretty impressive. And I thought, okay, that's pretty good. It flattened off a little bit, actually pulled back a little bit in March. That didn't surprise me too much. Thought it would go up some in April. But honestly, I don't think anybody has expected it to go up as much as it has. So we're up around 290, I think yesterday. Well, actually, I didn't look at yesterday's, I don't think. But last Friday, it was like 293 for choice. box beef, and it was about 283 for the selects. I think I got, oh, here's another chart. So this one, the dotted line is the cutout value. Of course, we're on a very different scale here, right? But if you break that cutout into the major primals, I didn't put all of them on here, but the 4 major ones. And so you can, and what you really see from this, if you look across there, the red and the blue line have gone up, and that's our rib and loin. So that's our highest valued products anyway. And they have been the ones pulling things up. The chucks and rounds have gone up some, but it's really been the middle meats. So we've had very strong, that's the message here, I guess, is we've had really strong middle meat demand. And I didn't put, I've got, files of some of the cuts and so on, but if you look at them, ribs, tenderloins, I should have showed you that chart. Last year when the shutout happened, lots of things started going up. Hamburger market went up, so chucks and round products went up because that's what grocery stores use to make ground beef. But the initial shutdown, beef tenderloin, which are our most valuable products, at an all-time low in March of last year, because the restaurant, it's almost entirely a restaurant menu item. And so that thing went the other way. We had several steak products that went down initially. Now they all went up in April when we shut the packing plants down, just because total supplies went down. But things like the tenderloin, to some extent the ribeye, went down initially, and then and that really showed how we shifted stuff from the food service side to the retail grocery side. I didn't put all that in here. I've told that story I don't know how many times in the last year, and so on. Drought monitor, you're aware of this. It's been there. The Southwest was dry much of last year. It's gotten generally worse. In fact, if you take all of these drought categories, you can put them together into a single number that's called the Drought Severity and Coverage Index. It's a simple way to kind of combine over everything into one number. And that number, that index right now for the whole US, is the highest it's ever been at this time of the year. Now, it's not quite the highest it's ever been. If you think back to 2012 and 2013, we had a bunch of weeks where it was higher on a national average basis, but it was never that high, and it has never been that high at this time of the year. And that's what really worries me, because every week that the drought looks like this right now, we're biting into growing season somewhere in the country. We're taking away forage production, both hay and pasture, in a lot of places. That stuff up in North Dakota, eastern Montana, northern South Dakota has expanded over the winter. That wasn't that bad last summer. It got bad over the winter. It didn't matter until now. It's almost spring up there. And so, they're about to be into their growing season. And in fact, this thing works. Watch that map. If you overlay that drought map, can you back that up one slide? I don't think I can, well, maybe I could do that here. So there, look at where the drought is, and it's approximately lined up here. That dot map shows you where the beef cows in the country are. Now, my point there is, if you look in New Mexico, Arizona, Utah, you all know this, there's lots of drought. It's tough on the folks that are there, but there's just never that many cows in that country under the best of circumstances. You look at North Dakota, South Dakota, western Nebraska, not to mention central Texas, there's a lot of cows. And if that drought continues to build in those areas, we could be looking at significant market impacts in general. We could be looking at something that changes the direction of the whole industry in terms of the cattle cycle. We know what happened here in 2011 and 2012. And in this area, there's enough cows that if we have a drought or Texas has a drought, that affects the whole country. I don't mean it to sound callous at all, but no matter what happens in New Mexico, Arizona, and Utah, it isn't going to affect the rest of the country. There's just not enough cows to really change things. Okay, so it's a tough deal for them, for folks affected, but in terms of the broader market impacts, we're really threatened right now with that potential. This is another way to look at the drought monitor over time. It takes all those drought colors, those drought map colors, and just shows them as kind of a bar chart, essentially is what it is, except it's painted in continuously. And so if you look at where we are on the right-hand side there, You know, you got to go back to 2011, 2012 to have a situation that looks at all like we're in right now. Again, that drought, that single index that basically combines all of those colors into one number has never been this high at this time of the year. It was higher in the summer back then, but once you get to July or August, you're going to have a drought. Well, you've already grown some stuff most years. Okay. And I've written a couple of articles recently in my newsletter, basically telling folks, if you're in a drought area, you're planning not right now, you're not planning for the next month or 2 months, you're planning for the next year. Because if you don't get the next 2 months, you don't get another chance to grow much until next year this time. And so, so that's kind of the situation that those folks are in. Oklahoma, this is the last drought map. Now this is going to change a whole bunch on Thursday this week when we get a bunch of them, right? And so a week ago, I came down Tuesday night for your deal and it was raining some then. We had some really heavy rain. I guess I talked to somebody after that down around Springer or someplace. They got 5 inches across there in that area. So this is going to change dramatically this week. And that'll be like the 5th time in the last year. I went back and looked. We've had pulses of drought trying to build back to the east in Oklahoma. I mean, we've had some along the western tier most of the time. It's actually in as good a shape as it's been for the last year, probably in the Altus area, that kind of area. But we've had several times, this is the 5th pulse, if you will, where drought conditions tried to develop, and we beat it back every time. I say something has happened to push it back. So far, so good. Oklahoma has actually gotten through most of this in pretty good shape. A little bit of southern Kansas is pretty good. Farther north of that last summer got really bad. Farther south of here got really bad. We've been actually pretty fortunate through all of this. Okay. This is weekly slaughter. Again, you can see what happened a year ago, the solid blue line. So again, comparisons to that really aren't very meaningful in terms of kind of what's normal. So I've gone back to most of these charts and put 2019 on there as well as that 5-year average. So you can see the green line shows weekly slaughter. Actually, if you average that all out, total cattle slaughter is just about equal to a year ago. Steer slaughter is actually, I think, up slightly. I've got a table in here somewhere. So the slaughter is still running pretty close to last year. I didn't put the chart in here, but the idea that slaughter capacity is a limiting constraint. One of the ways we get a sense of that is by looking at what they do with Saturday slaughters. That's really the only flexibility that packers have, is scheduling Saturday slaughters. Normally it's 1 shift a good share of the time, or it'll average out to maybe 1.5 shifts. Saturday slaughter so far this year is about, what was it, 60-something% bigger than it was through the same period a year ago, and about 90% bigger than it was in 2019. So if you look at that steer slaughter for 2019, we're well above that anyway. And we're getting there with Saturday slaughter. That tells me the packers are pushing as hard as they can to try to make this happen. And again, I'll get to the cattle on feed numbers in a little bit, but we're coming out of actually some of the biggest feedlot inventories we've had through this whole thing. Not only that, again, compared to 2019, you can see what happened. Carcass weights did not drop very much seasonally last year, because right in the middle of when it should be at its seasonal low is when we weren't killing cattle. So they sat out there and got bigger. And we spent most of the rest of the summer and fall trying to get caught up on them. So carcass weights, they started the year bigger in 2020. They ended the year bigger, and through the middle, they were a whole bunch bigger. There were times there in about May or early June when we were 50 pounds heavier year over year for these steer carcass weights. We averaged for the whole year 28 pounds bigger in 1 year. Now we've been trending up for 60 years, but it's like 4 pounds a year on average. Okay. I thought this year we would see it come down quicker. It hasn't. Okay. You can see the green line there. Even compared to a year ago, let alone 2 years ago, we're still way above a year ago, or we've been running close to year ago levels, but those were big. And so we continue to put these carcass weights up very, very heavy. And so combination of relatively large slaughter and big carcass weights, we're putting a lot of meat on the market. and trying to run a lot of cattle through the system at this point. There's total beef production. It does bounce around. You can see the February storm over there, the spike down. And then of course, again, we're comparing to a year ago, so you can't right now. And that one doesn't have 2019 on it, but you know, we're in that same range. Feedlot situation, marketings. This last cattle on feed report, March marketings were 1% above a year ago, but look what happened last year. That March marketings was actually a really big number. So we're trying to get caught up. Coming out of February, or I shouldn't say coming out, the February cattle on feed inventory was the biggest single month of any month, I think back to 2000. I should have went back and looked at my numbers. Okay. What happened basically was all that stuff that we went through last year, we worked through the worst of the actual backlog and got caught up in a somewhat current sense. But the net effect of all that was we pushed cattle from the end of last year into the first part of this year. We essentially lost about a year's worth of progress in trying to pull cattle numbers down, if you will, work through this cyclical peak in numbers. It would have happened last year without everything that did happen. We're still trying to work our way through it. And so we did have a big marketings month in March, and it was a little bit bigger. And look what, again, we're going to be comparing to April and May here coming up, which won't mean very much. So we're going to have a huge marketings number this next month, but most of that will be because last year was so far down. Daily average marketings is a better measure in many months, just because there's not the same number of days in each month anyway. So we always have to make that adjustment too. And there was, compared to those 2019 numbers there, the dotted line for March, we had actually 2 more days in May and March of this year. I think 1 more day than last year. On the placement side, again, we did 28% increase year over year in placements. Placements started to drop in March last year in anticipation of what was coming. Placements dropped sharply. So compared to 2019, we were just about equal to this year compared to 2 years ago, but way above last year. We'll be way above in April. And then you can see here by May last year, we sort of bounced back to kind of normal numbers. But, you know, see, again, you had the decrease in March and April, and then you had increases in, decrease in March and April, and then increases in July, August, and September. And that all kind of works out, but it has sort of long tail ripple effects that we're still working through in some sense. And so all those dynamics, they do, you know, we look at them over time, they do kind of average out, but it's not quite that simple either. Cattle on feed numbers, again, we had 2 months of sharp drop because on the one case we had a spike up in marketings combined with lower placements. And then it takes a couple months and we get back to year ago levels. But that February peak in the green line there was the highest monthly cattle on feed total. I believe it was back to 2000. And so, again, we're still trying to work through a lot of numbers. And I'm still hopeful that, you know, by the time we get into the second half of the year, we will start to see from a more longer term cyclical standpoint, we will pull these cattle on feed numbers down. We were starting to do it at the end of 2019, but then we really just lost a lot of ground last year with all of the disruptions. And so second half of the year, there's still a chance, but we're kind of running a little bit delayed. It's taking longer to get there because we're kind of behind the 8 ball. Okay, so wheat prices, this is kind of interesting. I mean, for a while I was looking at this from the standpoint of what it was doing for graze out potential and all of that. They dropped off and then have shot back up recently. The other thing is just note where the wheat price level is. So that's about, I don't know what that is, 660, something like that. Southern Plains corn price, the last posted cash prices were 725, 726, something like that in the Southern Plains. The nearby May corn contract was 720, what was it, or 740 last Friday. I don't know what it did yesterday. So in the short run, we got very tight supplies. We're still running, I think December futures are for corn are 560 something on Friday. I don't know. They were, I don't know what they did yesterday. I saw part of it in the morning, but I don't remember how they closed out. So we've got, and of course that's driven largely by demand. We've had tremendous international demand, mostly exports to China, but in combination with other things. And, you know, we're still trying to get this year's crop planted. We don't really know what we're going to make, but the bottom line is, even if we have a good crop this year, I think we're going to have elevated feed prices for the foreseeable future. Now, that is having an impact on the feeder market in the short run. Again, particularly since fed cattle are pretty much capped at this point. It ought to have some impact as we go through the year on those carcass weights. At some point, it ought to be less fun to spend money on feed in a feedlot. It hasn't yet, and that doesn't surprise me too much, but I think as we move into the second half of the year, at some point, we'll probably see some efforts to try to cut down on days on feed a little bit, or at least the total feed bill. And what that generally means is that feedlots are going to want to buy bigger cattle on the front end. They'd rather buy pounds than put on expensive pounds in the feedlot. So even though the feeder cattle market in general may be lower, it may also shift the relationship between light and heavyweight feeder cattle, and it may make some of the stock ring potential look a little better. I mean, that's what this industry can do that hogs and chickens can't, is that we can change over the lifetime of that animal the proportions of grain and forage that we use to produce that animal. And so high feed prices ought to encourage us to do more of that adjustment and actually favor forage intensive production systems in general. Now, it doesn't happen instantly. It'll take some time. It'll depend on how long lived this thing is and whether people believe it's long lived. But I think it will have that impact as we go forward. So, you know, if you get caught on the transition from higher prices to lower prices, your buy-sell margin kind of sucks. But once you make that transition as a stocker operator, then it's all about buy relative to sell, and you can have some decent opportunities. In fact, as stockers and feedlot guys, you really don't care whether overall prices are high or low, as long as the buy-sell thing works out, right? And we're in a transition here from kind of one level to a different situation. That's just a long-term view. I left it in here, kind of what's happened to cattle numbers over a long period of time, back to 1950, and beef production kind of highlights, and they're on different scales, of course, but kind of highlights sort of what's happened over time. Beef production per cow. I've been doing some long-term stuff. I had to write an article here recently, kind of a long-term view of things, and so I didn't put all of that in here, but I put a couple things in here to kind of show you how that's, you know, trended up over time. We sort of forget that we're producing 650 pounds of beef per cow anymore compared to about 250 in the early 50s. So we have made some progress. Most of that's come from the carcass weight side, but it comes from other things too. A lot of things have improved over time. Beef and dairy cow mix, just as a reminder. The dairy thing is really interesting too, and this is a whole other subject. You guys would probably be interested maybe in getting somebody down here to talk about that. I'm not sure who that would be, sort of locally. The dairy industry is rapidly changing breeding programs with sex semen technology available in a very feasible way. And so they're doing two things. They can take the best cows, the one they want to get replacement heifers out of, use heifer sex semen to get a high proportion of heifers out of those cows. That frees up the rest of their cows, and they're using beef semen to crossbreed those. In some cases, they're using steer sex semen to get a high proportion of steer crossbred calves. And in many cases, they're going right in with the beef cattle and not subject to the usual kind of dairy industry discounts and so on. As long as they come out black-hided and they meet all the rest of the specs of dairy, a half Holstein dairy crossbred that looks right can be CAB all day long.
Performance on those?
Well, it's you know, it's going to be a lot better than straight Holstein, probably not up to par with full beef calves, but you know, they're moving closer, as close as they can. So it's going to be somewhere in between. I haven't seen a lot of data. I don't know that we have a lot of data yet. Kind of a new phenomenon, but you know, I would expect they'll be somewhere in between. So performance will be better, probably not quite as good. One of the big changes is just the overall conformation of those carcasses. Holstein carcasses, or you know, Holstein calves, Holstein steers for years have fed well in the stand once you adjust for what they are, right? They will produce, well, historically, up until very recently, they were producing more than twice as many prime carcasses as beef cattle. Part of that's because the genetics are so narrow in Holsteins, you can put them in at 280 pounds, feed them for a year, and predict within 4 days when they're going to come out and be prime carcasses, right? And so they could shoot for prime and get a lot of prime because they're so predictable. The problem is the muscles on there, they're famous for their, what do they call them? Ice pick loins. They get really goofy conformation, and a lot of the restaurants didn't really like those. And there's still a fair amount of kind of holdover bias against Holstein carcasses. Some of the high-end restaurant chains, their specs still say cannot be dairy bred. And I think some of that's a holdover because they probably haven't looked at some of the newer ones. I don't know what they're going to do with these crossbred calves. That's a question. If you're Ruth's Chris, they don't buy, historically, they've never allowed Holsteins, even though if they were prime. I don't know what they'll do with these crossbred calves if they know they're crossbred. I'm not positive they're going to know unless somebody tells them. And I don't know whether they've changed their specs to reflect that or not.
There's always a bunch of them on Superior.
The Holstein calves?
Crosses.
Oh, the crosses? Yeah, you're going to see a lot more. You know, now I've been asked, what does that do to the overall cattle market? Well, in one sense, it doesn't change it very much. The calves are still there. They were calves before, there's calves now. So the only issue is sort of what does the crossbred part of it change? Maybe it changes, it doesn't change pounds probably all that much. It might change the quality mix a little bit, although it's not even clear how much impact it has there. So I'm not sure that I see a lot of market impacts other than in specific maybe product lines or, you know, branded product lines or something like that that have to, but we've asked the, you know, the CAB folks, again, if it's black-hided and it otherwise fits, even if they know it's a dairy crossbred, they don't care. If it is, it is. And they're okay with it.
What
So
does that do to the size of the cut there? Like steaks, are they going to hang off the plate on these?
well, that's the problem we have on the beef side. The dairy thing is not going to make that any worse. Like I said, they may look a little different on they may still have a little bit different shape, but no, that's the problem we've got in general in the industry is they hang off the plate, and consumers aren't really screaming for that, so we're dealing with it in other ways, right? These carcass weights, you know, I used to predict there was a top to them, and I've given up on that because I was wrong for 20-something years. So I've decided there's no real limit. I don't know where the hell it's going to stop, but there are some places where that's a real issue. Now, for a whole bunch of the industry, pounds are pounds, and that's what really drives the train and always has. But if you're Ruth's Chris, they don't like those big cuts because they do not want to cut a tenderloin in half. And if they don't, even at that level and that kind of a pricing market, there's still a limit on how much they can charge. And you know, to cut it like they want to cut it and cook it like they want to cook it, if it's too big around, it's a problem for them. And I used to joke that when we started to have to sell ribeye nuggets, we probably had gone too far. That's in essence what we're doing. And maybe it's going to work out okay. Some of those restaurant chains, including, you know, again, some of those high-end places on the ribeye, you've got that cap, you know, that spinalis muscle, which is really the most tender piece of the whole thing, right? They're peeling that off so they can market the center cut, if you will, to be a more reasonable size steak. And then they're taking that little spinalis and making some really expensive appetizers out of those things. And they're really good, but they're very, very expensive. But it also requires more fabrication, more cost, you know, more labor, which is in tight supply in the whole industry. So that's an issue. There's the cattle numbers from this year since I haven't been down here. And so I'm sure you've seen all these, but you know, all cattle numbers were basically unchanged, down 0.2%. Beef cows were down 0.6% this year, on top of a 1.5% last year. So, you know, the cow numbers peaked in 2019. They came down in 2020. They came down slightly again into 2021. The feeder supply should be tightening up leading into feedlots, but if you look at that feeder supply number right above cattle on feed, it was barely down at all. Again, we pushed cattle from last year into this year at both the feeder level and in the feedlots. And so we got to work through them. The cattle on feed inventory January 1 was actually up 0.3%. So, you know, again, that's kind of where we are. It's just taking longer to work through that pipeline of cattle. We will get there, I think, in the second half of the year. But it always takes longer than you think. And it doesn't take a whole lot of hiccups to slow that down even more. God forbid we had any more disruptions in the packing plant side, all bets are off. Because again, they're pushing pretty much as hard as they can, I believe. Given, you know, I think they're still having some, well, again, they had labor issues. I think there's some sort of continuing, ongoing labor issues, even related to COVID, as well as just broader labor issues. If you look at Monday through Friday slaughters, you know, Mondays are tough. You know, it's hard to get people to show up, right? Tuesday, Wednesday, Thursday, not too bad. Friday tails off a little bit, the weekend's coming. But they've been pushing, again, the Saturday slaughter. They have to schedule those at least a week in advance, but they've been pushing the Saturday slaughters to try to make up for some of the issues during the week, and with some success, but it's a limitation.
Right, the kind of profits that the packers are making right now, I don't really see much written about that or much pressure on them to bring that back in line. I mean, I guess there's no reason for them to.
Well, no, would you if you were them?
Not unless somebody told me I had to.
I mean, you know, well, and there is some, you know, there is some stuff being, I don't know how much you're seeing it, but there's a lot of chatter. There's a lot of recognition of that. There's been a general growing recognition in the last several years that packing capacity, it did decline over time and then with the cyclical expansion we've had since 2014, we brought those back in line. I had a chart that I meant to put in here and I forgot to, but basically it shows that since 2016, we've had a net shortage of packing capacity relative to cattle numbers overall. Now we can kind of work with that, right? But we're pretty close to imbalance, but a little bit on the short side. And so there is a lot of chatter at some levels that we need more packing capacity. What does it take to get more packing capacity?
Profits.
The kind of profits we're seeing right now. If this lasts very long, somebody will figure out to build another plant. Whether it's one of the big four or some outside group will come in, somebody will build a plant. They haven't done it up until now because despite what the chatter is in the country, I don't think their profitability on average has been as high as everybody thinks it is. Okay. And the things you see commonly in the media about packer margins and all that, personally, I think they ought to be outlawed because they aren't helping matters any. They don't cover a lot of stuff. But that's a separate issue. But you know, the world there's money all over the world that will come into this industry if the potential's there. And I mean that literally. I haven't heard it about the US, but I did hear it about Mexico several years ago. I participated in a call from the Singapore Investment Bank looking at potential because their perception in Mexico was that there was a lot of money to be made in beef packing in Mexico. Now they never did it, but the point is they were looking and they're watching. And I'm pretty sure they're watching our industry too. Folks like that. So if the profitability that we're seeing today exists, you can call it exorbitant, but you know, the fix to that is over time, somebody will expand capacity. Now there is a proposal out there now by a group in Nebraska to build a kind of medium-sized plant in North Platte, I think it is. Nebraska, you know, it'll be 2 years at least before it comes on, if it happens. There's several even smaller proposals around the country, and by that I don't mean really small local type things, but some smaller stuff. So we'll see some of that come on. It'll take a while. And honestly, the reason there aren't more of those now is because at the end of the day, most of them don't make it. And so, you know, they built that packing plant in South Dakota, Aberdeen, I think it was, about 6 or 7 years ago. And I don't remember what they kill. It's not, you know, it's fairly small, but not just a tiny plant. It's on its third set of owners already. And they might have gotten the cost structure down to the point where somebody can make it work. I mean, that's typically what happens, right? And so I anticipate that what we're seeing now, if it persists, will lead to some expansion by somebody, but it'll take a while. And in the meantime, our cattle numbers may fall to the point where it's not an issue anymore. We'll see. I think that's probably part of the reason there hasn't been a real big run out there to build a packing plant sooner, is because even with the cyclical expansion like we've had the last few years, I'm not sure anybody was convinced that those numbers were going to be big enough, long enough to justify another plant. The shortage that we have right now would just about cover one big mainline cost-efficient plant, almost. But it really would need a few more head to be sure it would work. So I think it kind of is a to be determined kind of a situation going forward. Okay. Oklahoma numbers, no surprises there. We had 10, 11% more beef heifers at the first of the year. I have no idea what's happened since then. In fact, our cow herd was up 4% almost. And we've tended to do that. Over the last 20 plus years, we've tended up when the rest of the country's trended down for the most part. So our share, again, some of the stuff I've been looking at here lately, I went back and compared a lot of states to where they were in 1950. And Oklahoma is one of a handful of states that moved up in general as in terms of the beef cattle business over that time period. We went up and of course and came back down, but as a share of the total, or as a rank in the total, we have gone up over time. Replacement heifers were about flat. It's not clear that we were trying to liquidate. Heifer slaughter since then might suggest that we're not very interested in retaining heifers. Cow slaughter is up a little bit too. Some people are saying for sure we're liquidating the herd right now. I think we might be, but I'm not quite as convinced as some people. We'll see. It's definitely a possibility going forward, but I'm not convinced it's a sure thing at this point. In long-term perspective, as cattle numbers have tended down, these are on the same time period, right? So back to 1972 in this case, right in front of the all-time peak. Cattle on feed inventories have generally trended up. Now they had to come down in 13, 14, 15 because we just flat didn't have the cattle. But in general, we've gone up. As a percent of calf crop, feedlot inventories have continued to go up. Feedlot capacity, as reported by USDA once a year, we've actually added about 1 million head of cattle feeding capacity since the late 90s. I never looked at this till about 2 or 3 weeks ago. Feedlot marketings as a percent of capacity went down, bottomed in 2014, and then has come back up a little bit with the cyclical expansion in numbers, but feedlots are not able to turn over cattle as fast. The only way they've been able to maintain inventories with fewer cattle is basically slow them down. And what does all that mean? I don't know, you tell me. I'm still trying to figure it out for sure, but what it tells me in part is that the feedlot industry has been really creative at trying to stay in business when the market was maybe telling them some of them needed to go out of business. I think that's what it's telling us.
That gets back to your feeding them longer, the bigger carcass weights.
Uh-huh.
I mean, that.
Is that money? Oh, well, okay. Interestingly enough, so this is a plot of placements by the major weight categories we get. So less than 600 pounds, 6 to 7, 7 to 8, and 8 to 9. And the two time periods there are the late 90s and the most recent 5 years, 2016 through 2020. And if you look at that, and you can't see the percentage on that right-hand side, but it's over 40% of the cattle now are being placed over 800 pounds. But if you look on the left-hand side, we're placing nearly as many under 600 pounds. It's dropped just slightly, and the big drops are in the middle. Feedlots either individually have gone one way or the other, or they're using some mix of really heavy cattle, which is probably what the economics favors, and lightweight cattle, which helps fill the bunks and keep the feed mill running. That's the way I interpret that. We've gone to an almost bimodal pattern of placements where we're placing a bunch of little cattle, which I think again is a way to keep the doors open. And the lightweight cattle are probably in response to the fact that cattle are bigger, and the economics in general has probably favored bigger cattle over time. So if you look at, this is the Kansas feedlot data, particularly in the last 10 years, but an even longer term trend back to, what is that, late 90s, days on feed has averaged up. So again, if you're in the feedlot business, you're not really in the cattle business, you're in the feed business. So as long as the feed mill's running, we're okay. Or at least that's the theory. And I think that's what's played out over time. So some of the stress that's out there may be related to this. I mean, the packing industry took 30 years to adjust down. They did, and about that time we came back up in numbers a little bit. The feedlot industry has not made similar adjustments. Now, I'm not throwing rocks at anybody, but I think that's that lack of adjustment may be part of the reason there's a lot of stress in that industry. We're scrambling to find ways to do what we're doing. I don't know. I haven't got nerve enough to write that because too many people know where to find me. So I haven't. I'll deny it if anybody in this room quotes what I just said, because I'm still working through it. But that's kind of the way it looks to me when you look at those. You look at those numbers. I will vigorously deny that I ever said any such thing. Total slaughter the year to date is 0 compared to a year ago. Now, of course, again, we were already starting to drop off last year at this time. So some of that's not really the last couple of weeks is not a good comparison. But you can see so far this year, heifer slaughter's up a little bit. Steers are actually down, I guess, slightly, 0.3%. Beef cow slaughter is up 2.6%. I don't know that it means liquidation, but it might be an early indicator of liquidation, possibly. Meat production, our estimates overall, I've got beef production down. This is actually LMIC forecast. We're generally in agreement on the question may be how much it's down. I think USDA is actually saying it'll be up a little bit this year. They're counting on these carcass weights staying high, I think, is where that's coming from. But anyway, beef production will be down. I think it'll be down. It'll be flat for sure. And it was flat last year, basically no change. Pork production, we keep revising that down. They have pulled back a little bit, but it's still probably going to be up slightly. Broiler production up slightly. All of these are kind of flattening out after several years of pretty steady growth. So total beef production may be pretty flat from an aggregate standpoint. Beef production on a quarterly basis, if you look at the two right-hand side, the last 2 quarters of the year, on a year-over-year basis, we're expecting bigger decreases in that beef production in the last part of the year. So again, we're struggling through the first half, trying to get caught up, trying to get through big numbers, trying to get more current. And then I think beef production will fall both in the case of numbers and probably carcass weights as we get into the second half of the year. Choice select spread has been goofy all year. I can't tell you what's going on. Last year, amazingly enough, through everything that happened, it actually followed a pretty similar pattern. I mean, it had kind of a spike here and there, but the general pattern in 2020 was close to the normal pattern. This year, it went down early in the year. I mean, it went up when it should have gone down early in the year, and then it's kind of gone down here lately when it should start going up. I don't know. for sure what that means. Beef consumption is falling after peaking last year by just a little bit. Okay, beef supplies, beef production may be flat to a little bit smaller. Consumption will be down even more based on the trade stuff. Let me finish that up. We got a few minutes here. Beef production, this is USDA's January estimates. So just a perspective, the US is the biggest beef producer, Brazil, EU, looking from right to left, China, India, Argentina, and so on. That's forecasted production this year. Exports, Brazil will be the biggest. The US, if you notice, is equal to or actually may come in a little bit higher than Australia this year. For the first time, we've been the third or fourth, most of the time the fourth largest exporter for the last 10 or 15 years. And Australia's got continuing problems, so they're down. India was higher and at one time the biggest, they're down. And so we may actually be the second largest exporter this year on modestly improving exports compared to being off slightly last year. On the import side, China has jumped up by a big chunk to be the biggest importer. In fact, you need to take that China bar and add to it the Hong Kong bar to really have that market. And I'm going to show you the data in a second. Increasingly, we have to put those together to really know what's going on over there because that market is not separate anymore, even though the data still is. US is still the second largest imports. That's what's happened in China. Pretty sure I've shown you that before. It's just jumped dramatically in recent years in terms of their beef imports. So this is, if you look at China and look at beef, pork, and chicken, of course, in 2020, it started in 2019 after African swine fever decimated their pork industry, which is their biggest meat and their most preferred meat. They started increasing pork imports. They jumped dramatically last year, including from the US as well as everywhere else. Their poultry exports were up and their beef exports were up. The beef exports were growing before African swine fever hit. And so I think it's a long-term demand issue in addition to the fact that they're short on protein still. They're struggling still in 2021 to get African swine fever under control. They keep saying they've got it under control and then they keep having outbreaks. It's not quite under control. So they're going to continue to import, quite a bit of pork, probably at least the same amount of chicken. These are the forecasts for 2021. And beef consumption continues to, or beef imports continue to grow. If you take China out of the rest of the world, and I didn't show you the one where they're in there, the generally growing meat imports around the world are growing, but when you take China out, the rest of the world's pretty flat. So the lesson there is China is kind of the big mover and shaker in terms of the change in global markets. Now, other markets are important in terms of the totals, but because they add up to all of this, but in terms of what's changing, it's really China that's driving that. Our exports are down slightly for the year. They were about flat in January, down a little bit in February. The data is 2 months lag, so we should get, what is this, 4th? It's Star Wars Day, by the way. May the 4th be with you. But anyway, it's also my son-in-law's birthday, which helps me remember that. So, but we'll get new data, I think this Friday for March, something like that. So that's what's happened over time. Again, 2020 was, or 2020, excuse me, was down a little bit. In fact, 2019 and 20 were both down from the 2018 peak, and we expect to pick back up a little bit here in 2020. Not dramatically, but maintaining kind of a plateau up there on exports. That shows the breakdown historically of where it's going. And again, in this case, that light blue, kind of teal, turquoise colored bar is China and Hong Kong added together. Hong Kong has been one of our major markets for about a decade. China was not a market at all until really last year. And so if you compare 5 years ago to last year, there's the market shares. Japan's up slightly. South Korea has been our most consistently growing big market. Mexico was off sharply. Canada was down slightly. China, Hong Kong combined was flat last year compared to 5 years ago. But the proportions of that, I'll get to it in just a second. I've got a chart that shows is switching between the data that shows it going to mainland China versus what's going to Hong Kong. So there's Japan, there's South Korea up compared to last year and well over the year before. Mexico's still off. They're still struggling. They got major economic problems as well as pandemic problems that they're still wrestling with. Here's China, Hong Kong together. So you can see how they grew last year, 2020 compared to 2019, and so far this year, well above both years. If you look at them this way, the blue part is Hong Kong, which has been there for a decade. This only shows the last 5 years or so, but it was last year when the part going to China really jumped. So the combination, and as expected, Hong Kong is going down because we used to ship it to Hong Kong officially. It was still winding up in China unofficially. Some of that was transshipped. That's the term. Now, as the exports officially go to China and directly go to China, we sort of expected that Hong Kong might drop off a little bit. So you look at the two together to see the net impact and that. China by itself, that's what happened last year. And so far this year. So pretty dramatic. It's still a small share of our market, although combined, China, Hong Kong was our third largest export market last year. China by itself was, I think, our number 7 market last year. At the rate they're growing, they have the potential to move up pretty dramatically in the next few years, potentially. There's Canada. Imports, you can kind of see what happened. They did spike up last year because of our supply disruptions, but short-lived. In fact, it's down. I guess I showed that here. They're down so far this year. That's where it comes from over the last 20 years or so. This is some new data that I recently got. Actually, one of my colleagues up there got it for another project. Kind of interesting, and it sort of helps confirm what we sort of knew was happening, but we didn't actually have the data. This shows the breakdown by basically customs designations coming in of what's coming in from various places. And so Australia, New Zealand in particular are predominantly trim. They label it as trim, so it's processing meat for ground beef. Australia has a significant chunk of primals and subprimals. I can't be sure what that's being used for, but I suspect the majority of that's also getting ground. It's just the way they're buying it is in a designated piece as opposed to an undesignated chunk. Some of the trimmings come in literally as pieces, so it's coming off of their processing fabrication stuff as trim, but some of it's coming in as designated primals or subprimals, but probably still getting ground in many cases. Can't be sure of that. New Zealand's almost all trim. Canada is a mix of things. Again, primals and subprimals, hard to say. Some of that probably is getting cut into cuts, although it's not imported as cuts. That's the yellow part, or that's the red ones, excuse me. Mexico is the unique one, and I knew this was happening, is that its majority of it is coming in as cuts. And so you can go to some of these value grocery chains and find a bag of ribeyes from Mexico, and it says product of Mexico on it. And that's where that's coming from. Nicaragua is all trim, so on and so forth. Okay. Average annual cattle prices, we're still projecting on average modestly higher prices in 2021. Now, in fairness to everybody, if you went back a year ago in January and February, we predicted the same thing for 2020, not knowing what was coming, right? We were set up to do what's going to happen this year, I think, last year. Again, we kind of just sort of lost a year in terms of the industry's progress relative to cattle numbers and the flow of animals through the system and so on. So that's kind of what we've got. If you want more numbers, That's quarterly estimates for calves, feeder cattle, fed cattle. So by the end of the year, we've got, again, on an annual basis, modestly higher, 5 to 7% higher prices at this point. I'm a little nervous that we could wind up having to pull these down a little bit with the problems we're having now. We're kind of taking longer to get in better shape than I thought we would. But I'm still fairly optimistic about the second half of the year at this point. Now, those quarterly estimates, the second quarter in particular, looks pretty big, but again, that's comparing to last year, right? So all bets are off in terms of what that really means. So 12% higher calf prices in the second quarter of this year tells you that they were a whole bunch lower last year because of the pandemic. Not that they're that much better this year. But by the second half of the year, much of that was working its way out, and certainly by the fourth quarter, those year-over-year percentages start to reflect valid comparisons, I think. And that's kind of the way it's still looking at this point. As always, you know what my disclaimer is. This is valid until I can get home and change it. Okay, they will get revised. They get revised at least monthly as more information comes in. So, it's a moving target, but that's the way it looks kind of right now. I think that's just the annual numbers, and I'm done. You guys don't need that. You know where to find me. Got just a couple minutes for some more questions, discussion. And hey, I'm out of the house, so I'm not really, I escaped for a while, so I'm good as long as you guys want to visit. Questions? George, you've been pretty quiet.
I don't know, just kind of taking it over.